Hey guys, and welcome back to Smart Money Minds. In today's episode, I'm going to be talking about the top 5 mistakes made by stock trading beginners. So, this COVID-19 pandemic has really showed me a very interesting side of the economy and human nature. The last couple of months, I've had a lot of beginners and people who've never invested in the market before ask me about which ticker to buy and how to set up a margin account, etc. I think it's awesome that all these people and more people want to take advantage of the dropping stock market, and they see that now they have the time and the resources to try to do some stock trading for themselves. But then there's also a ton of mistakes I see that these beginners are making, and these mistakes that I've made before. I myself have made these mistakes over and over again too, and before I was finally able to break free from these habits. So the first mistake that I see often is FOMO buying and panic selling, and that's all part of emotional trading. Oh my god, this stock is going to all-time high. I must buy as it's going to just keep climbing. It's going to go to $300. Or, oh my god, this stock is crashing and everybody is selling. Do I hold? Do I sell? When do I hit my maximum emotional pain where I have to sell? So if you believe it's a bullish trend, then buy it and do so, and have that belief in yourself and set a stop in case you're wrong. Having FOMO buying is when you have greed, and as in, I want more, or regret, oh shoot, I'm not in this stock yet and it's running away without me. And panic selling is when you have fear in the market, not knowing where and when it'll stop dropping, and you start just hoping for things to get better. When you start depending on your emotions and feelings to trade, then you're no longer trading, you're just gambling. You might as well take your money to the roulette table and just get your sweaty armpits going. When you're trading on emotions, it's easy to think that the market is against you. When you buy, it goes down or it trades sideways, and when you sell, the market goes running back up again. This can lead to a lot of frustration and the feeling of helplessness in the market. The second mistake I see a lot of beginners running into is acting on news. For example, when Warren Buffett was selling all his airline shares. He's one of the most well-known investors ever. Do I follow him and sell all my own airline shares as well? When IPO stock shoots up 60% on the news, do you go ahead and you buy in the next day without doing any analysis or fundamental research? And so this is what we call herd mentality. When everyone in the public space is hearing about the stock and buying it up, likely it's the last leg up before a major downturn. Smart money, like big banks, they're the ones who control the crowd and the media outlets. They know to buy the stock up first and then announce the news to the public, telling them how hot the stock is, and wait till everyone else has bought in afterwards before they pull that carpet right out from everyone, leaving the herd behind for greener pastures. In order to make money in the market, we have to think like smart money. What tickers have the potential to run? Are there any accumulation periods where there are no downward selling pressure? What stock is being sold on the news? And what's the newest and hottest trend and company? You don't want to be buying a stock that's up 40% in the last 2 days, unless you're confident with the technicals or the fundamentals. The third mistake I see with a lot of beginners is their belief that the stock market and the economy is equal, but in reality, it's not always true. This pandemic has shown us this unique situation playing out, in which the unemployment rate is at an all-time high, everything is closed, and the economy is on life support and held together by the governments of the world and just pumping money in, but yet the S&P 500 has bounced 30% from the low. This is the irrational movement that I'm talking about. What we live in reality is not always true in the market. The economy doesn't have to relate exactly to the prices in the market, because the market reaction can be delayed or some things could have been priced in. If people think that a great event is going to happen, then people will have major interest and the prices drive up, not because the company itself is worth that much, but it's because of speculation and hype. Think about the marijuana legalization in Canada in October 2018. Canopy growth went up to almost $60 just due to hype, and now the stock is a mere $15 to $20. Many of these major marijuana companies have become penny stocks or have even been delisted. As a stock trading beginner, don't always believe in what you see in the real world. Look at the price action and the technical indicators because the chart is the only thing you really care about. The fourth mistake I see a lot of beginners having is just setting unrealistic expectations. I've heard a lot of, I want to triple my money in 3 months, or I want to buy a house in the next year with my stock market earnings more than just once. Sure, you may get some good gains at the beginning, but the stock market will easily put you back in your place. Trying to make $100,000 in 3 months with your $10,000 account is likely not going to happen. You'll be lucky to make 20 to 30%, but you're more likely to actually lose a good chunk before you know what the heck you're doing. At the beginning of my trading career, I actually made 3 times my account in 3 months due to the marijuana run, but because I was still relatively new back then, I gave it all back and more. And it's mistakes like that that makes you realize that I need to set my expectations much lower. If I can even do 1% increase every day, that's plenty. And the fifth and last mistake I see in a lot of beginners is thinking that they need to make money in the market every single day. The market will go up and down, and it may break support or V-shaped recovery and go back up to a new high. And if you think that your stock will be green every day, that's virtually impossible. You'll take some losses, and that's a guarantee, but as long as your winners outweigh your losers, you're in a good place. You want your gains and your account balance to end up like a chart uptrend, which goes from a high to a higher low, and to a higher high and a higher low. Even if you're scalp trading, it's very hard to win every day as the market patterns can turn on you very quickly, or you can make a mistake, or you trade the wrong ticker, or a news event happens when something is in an awesome uptrend and it just tanks the stock. And some days there are just 0 good trades, so you just don't trade. And if you force yourself to trade every day, the likelihood of you making a mistake is much higher and you'll face unnecessary losses. But if you focus on high confidence trades, they may come once a week, once a month, maybe even once a year, but if you smash those home runs, then that might be the only trade you need to make. So in the comments below, tell me if you have committed any of these beginner mistakes before, and which one did you commit most? If you enjoy my videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time for more stock videos.